Brian Manning here, and happy Friday. Time for another weekly update, and man, do we have a lot to talk about this week. So, Monday, watching oil prices decline, and oil prices have been approaching this $40 a barrel, and right now it's partially based or very largely based on China's lagging economy. You know, China's second largest economy in the world, and as they're starting to slow down there, certainly will look like they'll purchase less oil and puts the pressure on the cost of oil and driving us down towards $40 a barrel. Certainly watching retail sales, got some retail sales data, and just haven't seen the retail sales bounce back with the expectations that some had when the oil prices started to drop. A lot of people had said, hey, oil prices are going to go down, costs of the pumps are going to be cheaper, and U.S. consumers are going to spend more money. Well, it just hasn't been the case, and I did the math. So I figured out that if you drive on average 12,000 miles a year, right now you're saving on average about $1 per gallon at the pump, and this is only coming out to about $8 per week savings. So what some analysts thought would be a boost in consumer spending based on lower oil prices just hasn't happened. Monday this week we also got news from new construction and the builders. National home builder sentiment was reported and the strongest in 10 years. So on a national level, new construction is just stronger than ever. Tuesday, stocks were just continuing their downturn. A lot was based on Walmart's earnings not meeting expectations. Walmart is the largest retailer in the U.S. They represent about 10% of all retail sales that take place, and with them missing earnings, certainly concerns out there the economy is just not recovering as strongly as they want it to. Wednesday this week, we got CPI, Consumer Price Index. This is one of the Fed's favorite gauges for measuring inflation. And we've talked about this in the past, and we said, hey, the Federal Reserve wants to raise rates when inflation is at 2%. So we got the CPI reading, and CPI was slightly beneath expectations, and it was only up 0.1%. So what happens is the report that we just received replaces the report that was at the same time last year in 2014. The same report last year was also only up 0.1%. So based on this, inflation for this last month has been stable, still holding at 1.8%, so not at the 2% range just yet. The next CPI report will actually come out on September 16th, which is one day before the Fed's meeting when they will discuss raising rates or leaving them where they are. And it'll be interesting to see what happens, and if we approach this 2% range, and if we go up 0.2% before this next Fed meeting, it would be very likely we'd see a Fed hike at that time. So we'll have to wait and see. Also, Wednesday this week, we got Mortgage Bankers Association put out their data on loan applications, and really great to see that purchase applications, so loan applications for new purchases, year over year, this year compared to last year, are up 19%. So again, more great recovery in the housing market. Thursday this week, we got the minutes from the last Federal Reserve meeting in July, and it just gave us really no hint at all as far as what the Federal Reserve is going to do. But one thing it did show us is that not all of the Fed members are in unison or in favor of a rate hike here in the future. So, interesting to see, and we'll just have to wait and see what happens in September. Also got data on existing home sales. Existing home sales were up 0.2%. Again, more strong home buying recovery going on here. And what's interesting is that first-time home buyers right now are making up 28% of all purchase transactions. Historically, in the past, first-time home buyers make up about 1/3 of all purchase transactions. Not too worried about this, though. If you've taken our social media class, we talk about millennials. And millennials are coming into this market strong, and they're about to take over baby boomers and become the largest cohort in buyers by about 20 million people. And so looking at millennials moving into the marketplace as first-time home buyers would be very likely to see this move back up to that 1/3 of all purchase transactions. So if you're looking for a new market, millennials and first-time home buyers are going to be very strong in the next upcoming years. Also, Thursday of this week, the stock market had the biggest down day in the entire year of 2015 so far. And again, a lot of this has to do with China and the concerns there. Starting the day off today, stocks are significantly down. 10-year Treasury is up, 10-year Treasury yield is down to 2.05%. So we're seeing some benefits there. But what's really amazing is usually what happens is when the 10-year Treasury goes down, the price of mortgage-backed securities goes up. And when this happens, mortgage rates, they improve, they get lower. Well, we're not seeing that right now, and it seems that a lot of bond traders that trade with mortgage-backed securities are waiting to see what the Federal Reserve is going to do before they make any big moves. And I know this is counterintuitive, but we talked about this before. And if the Fed raises rates in September, bond traders will be happy. They'll see that the Federal Reserve is doing this to head off inflation, and that will allow for improvement in mortgage rates. So mortgage rates will go lower based on this happening in September. So we'll have to wait and see what happens. No one knows, but wow, what a wild week with the stock market all over the place, and certainly probably ending on a downturn, but we'll have to wait and see what happens. I will be around all weekend. If you have any questions, give me a call. If you have any buyers that need to get pre-approved, please give me a call. I certainly would love to help you and be part of your business. Have a great day.